Porinju Veliyath, MD and Portfolio Manager, Equity Intelligence, joins us on the show from Kochi as always. Porinju, really good having you. Thanks so much for joining in. What's your sense now? I mean, we are hearing a lot of people talk about the near-term dips that may come in, but if indeed interest rates are set to correct, is that a long-term or a medium-term positive for the markets at large and for the rate sensitives in particular?
Near-term dips and perhaps the corrections, in a rising market, a section of people will always be talking about that. Of course it comes. Market doesn't go just one way up. So there will be pockets of, corrections. But for an investor, it's not very important. We are in definitely an uptrend and a very, structural uptrend of the market. Everybody agrees that India is in a sweet spot. See, that's very important. We cannot just underplay with that. We have a world-class leader today, a stable government, commodity prices coming down, interest rates and inflation going down. So, it is a lot of ingredients together. So India is definitely in a sweet spot. Investors have to look up.
Porinju, sure enough, not a cause of concern for investors, but there are still some of our viewers, who've completely missed out on the rally, and they perhaps may be waiting for this dip that the market is going to throw up as a, entry point. What's the word for them? And more importantly, how deep could the dip for the market get? Today we're just seeing, 8,500 getting challenged. Can we see a significant correction from these levels?
Not at all. I don't expect more than 3 or 4% kind of corrections for some bad news or for some triggers like that. See, it's difficult to say people missed the equity opportunity in India. They are not late. I'm telling you, if you want to be apprehensive or be cautious, there are a lot of elements. But looking at the sheer fundamentals of companies and the valuations, I'm very confident nobody has missed the just started rally in this Indian stock market, and it's purely on logic. I'll tell you one thing, just being listed, many of the companies and the promoters are seeing it's a huge advantage in the last 1-2 years. I will tell you, some companies, some management feel, if the company was not listed, and if they had an opportunity to raise funds through private equity fund or something like that on IPO, they would have got manifold kind of a valuation than it is quoted today. For example, I talked about NIIT in the last interview 3 weeks back. NIIT is quoted at around 800-900 crores today. If this was not a listed company and it's a fresh company trying to raise private equity, there will be merchant bankers making it a $1 billion company. So that is why I'm telling you there is a lot of hidden values or depressed valuations still in the listed space in Indian stock market.
Since you brought it up, Porinju, I was going to ask you about real estate, but since you brought up NIIT, let's talk about that. You do like the company. Why so?
Definitely. It's a very good company. They went through bad times of the bad cycle of their business. The management is world class and they are really creating well. They have placed the company in such a way any emerging opportunities will be taken advantage of. And today at 900 crores, I feel this is one stock investors should bet on with a 2, 3, 4 year perspective. And I'll be surprised if people go wrong. And it's very, very safely priced. There's a lot of margin of safety. The company is holding a significant portion of the NIIT technology. And the balance sheet is very clean. Management is very professional. And they are building up businesses in the relevant space. And their corporate learning solutions in US, I'm very bullish about.
Porinju, you were the first one who stuck your neck out on DLF and gave a contra call. Are you still in tandem with the thought and the bullish call on DLF, and do you still have your holding there?
Definitely. When I talked it 3 weeks back at around 28,000 crores market cap, what I had in mind is this can go a long way. Now it is around it was 18,000 crores, today it is around 26,000 crores market cap. This can even double from here in the next 1 year or maybe 18 months time. The company has strong fundamentals. It is true that there are challenges today, more than SEBI order or the government attitude. The challenge I am seeing is the industry negatives. there is a lot of supply-demand gap and huge inventories held up, and so all those industry fundamentals are currently negative. But with a declining interest rate, please remember one thing: India's interest rates are definitely going to go down. I'm not sure in the next week RBI will do something, but there are clear indications. We are seeing a peaking out of interest rates in India. So these real estate companies, so DLF is definitely the leader. I think it can even go up by 100% from this level in next 1 year to 18 months.
But Porinju, what about the others, the likes of a TCI or for that matter a Dish TV as well? Do you continue to believe in the fundamental stories? Because Dish TV has had a bit of an iffy move ever since and has seen some bit of underperformance as well.
Definitely. I have been buying Dish TV since last year, and it's an underperformer in our portfolio. Underperformance has gone up by something like 40%. But if you see the last 1 year, a mid-cap has moved up by 40%, means it's an underperformer. That's the way markets have behaved. See, Dish TV at around $1 billion valuation today. They are yet to report net profit numbers. So generally the perception is that, people are waiting for the numbers, and, the people who have been holding it earlier, they have started selling it off. Few FIs are selling off. But if somebody look at the fundamentals of this company and its ability to create wealth in the future, I feel Dish TV can go up by 100% from this level in the next 1 year time. It's the leader with around 28% market share in a country with 1.2 billion people. So one more thing, industry leaders, there are industry leaders in the mid-cap and even in small-cap segment. Now everybody knows the industry leaders, say Sun Pharma or maybe TCS, those ITC or Hindustan Lever, those kind of the big leaders everybody knows. But there are companies, I would say, NIIT is a leader, what we discussed already. TCI is a leader, it's a leading logistics company in this country, where there is a huge growth ahead. At around 1,800 crores, I think TCI is a very good company to pick. Of course, there is for people who are looking at the recent stock price movement, that could be a hurdle. It has moved from 60, 70 in the last 1 year to around 260 today. But I feel there is a lot of value left. There is no hurry to buy it today. There can be some small corrections coming up and you can buy it. But Dish TV, my confidence level is very high. I think it is near the bottom level it is traded. So margin of safety is very high for Dish TV. Another stock, I would say, a small company, again a leader in the industry, one of the leading companies, Sycom Electric Securities. There are many apprehensions about the management, low shareholding, or many other things. But this is a company, Sycom, I am talking about, it's growing at around 35% for the last 4 or 5 years. Even this year, the company is likely to report around 1,200 crores of revenue and maybe 70, 80 crores of net profit. And the market capitalization is around 250, 60 crores. So there are such stories when you come down from the top line companies, which are industry leaders, which can create a lot of wealth in this country in the coming years.
Porinju, you've also talked about as to how you like Link Pens and Swelect Energy, which have seen good appreciation. Are you looking to book profits here or are you staying put?
Swelect Energy definitely is a very long-term story. I want to take a small pie of the solar energy business in the future, which is definitely a futuristic business. I'm betting on the capability of the management to create wealth. They have proved it earlier. And there is a lot of margin of safety for Select because still the stock price is below the cash equivalent. So I feel there are very rarely you can see such safe companies in today's market after the huge rise. The other company, Link Pen, she had a huge run up. I think it's around 180, 90 today. A few weeks back when we were talking about it, Link Pen was 120. It was 35, 40 rupees a year ago. But it's a small, cute business. If you search in the small cap segment or mid cap in India, you will find a lot of niche companies, niche products, niche services, and very cute businesses at throwaway valuations. One more advice to the investors from my part, look at companies, listed companies, in such a way that this is not a listed company. A merchant banker or an investment banker is going to value this company for a private equity. Then you will find the valuations. On that perspective, I feel The stocks, thousands of stocks, listed companies have long way to go in India.
Porinju, out of time completely. 30-second answer. Why do you like TCI?
See, now the talk of the town is about, the logistics, the GST, the kind of revolutionary reforms going to happen, and everybody is confident they will happen. So in that improved environment of the industry, TCI, there are many companies which have run up 5 times, 10 times. But TCI, I prefer TCI because of a stable business model. They're one of the pioneers in India in the business, and they can create wealth with a lot of margin of safety for the shareholders.